This is London with MarketHedge. I almost pulled away from Bitcoin, but I decided to go ahead and dive in. Now, let's talk about the orders I just placed in, why this could be a great breakout, but could be a little tricky with a downside target. This is London, former hedge fund owner, private, non-SEC, not financial advice. You're seeing this green shaded area. Each of those is actually an order. You see them logged on the right-hand side. I want to discuss the full range that I just covered. I just stacked 100 orders on MarketHedge. You got it. Each order is $200 in margin, $275 on leverage, and the increment between each order is $100. $239,000 is the overall exposure. I want to talk about why I covered the field this low and why it's a conservative move in the market. This is London, former hedge fund owner, private, non-SEC, not financial advice. If you've been following the last couple of months, you've seen this account go from 10 grand to 475. I do try and be reasonable with it. I know I'm bringing you trades. Do understand if I bring you trades from this account, you still need to run your own account. Period. Anything can happen, okay? Anything can happen. This is the riskiest type of investing you can possibly do. Each and every trade could be worthless. You guys know that. With that said, I'm ready to kick into the market. I want to show you why. First of all, let's discuss that upside target. It's a nice ascending triangle. You agree? Yeah, it looks nice. We've got that specific preceding pivot, one, pivot two. So we have a nice flat top, giving the buyers right now an interest that they need to surpass up and over that 113, almost 114 with some momentum. Now, where's the momentum coming from? Very nice to see on the daily. You got it right on that daily. Look at the MACD histogram. We are up and out in positive territory. So this in and of itself is a signal. We reached a signal on the MACD, that histogram flipping to the upside. It's nice to see. Now in terms of the daily, you'll see the 20 moving average up along the top. What I'm interested in is this, and this relates back to the specific trades, and I was going to just relax, give it a little bit of time. I said, no, I'm going to power into Bitcoin. Here was, and by the way, since Friday's video when I called the up was the direction, if you guys took that to heart and made some cash, congratulations, and hit the like button for me. Do something, shout out in the comments. We called that one right. So we don't get everything right, but we really try, guys, really try. Now in terms of the 20 moving average is slanting down right now. Bulls are pushing up and over. The issue is I'm concerned about this, or I'm looking at this from the 20 moving average or current price down to that standard deviation on the daily. It's about $10,000. Now, 10,000 is the range that I chose to cover on my specific spread of my stacked orders. 100 orders stacked. Every $100 gave me, you got it right, $10,000 in coverage. So that's that green area again that you see. Now, with the understanding, it would be great to go ahead and just take off. Now, with MarketEdge Pro, when I stack orders, I always pick up one order immediately. So you'll see some bright green ones, maybe one bright green one. Yeah, one bright green order here automatically catches. So anytime I enter a hedge, I've automatically got at least one position heading in the direction I want to go. Now, the issue is we could, amidst the breakout, we don't want to miss the train, right? That's it. We don't want to miss the potential for the movement to the upside with the momentum we have going on, but we do also have this specific line of interest at 112,000, which is nearly, guys, it just really close to a flat top resistance, which is attracting some interest from the bears. I guarantee you the bears are eyeing this. They want that re-hit on that 113. So to the extent that Bitcoin wants to power in here and get a little messy for the bulls who are trying to break out right now, you betcha. To the extent anything like that were to occur, I'm not calling that, but I am prepared with all these stacked orders to play a nice rebound with increased interest. You guys got it right. And these specific orders are tied into BTCC directly. So BTCC, the longest standing crypto exchange, never been hacked, guys. Very confident and very just capable partners. Excited to be trading with them again this year. Now let's look at this $10,000 spread. I want to back test very briefly and show you that amidst this higher target, and we'll go ahead and call this higher target from the triangulation, that 124, we've got, let's go ahead and just make sure and measure that 124 is the carry down. There we go, and indeed it is. So that carry down, let's say just to carry up, that amplitude is a clear target to the upside. It would give some relief to anyone who needs to break even. The buyers who got involved in it around the top, around the 125, they may be still waiting for a break even, and the market tends to give people a break even opportunity. So amidst the nice structure to the downside, let's talk about very quickly the final thing, and then I'll let you guys go. And shout out to all the VIP. Shout out to Luke, my man, what's going on, brother? Hope everything's good up north. And to J-Mac, what's going on, brother? And Daniel, I got to say, yo, nice to see you trading in the back. Nice to see those trades. In terms of the histogram to the upside, we've got the momentum on the MACD. This signal in and of itself is a nice thing to see. That green on the MACD daily. We love it, guys. Way to hit it, bulls. Nice to see. Now, in terms of this specific coverage down to the standard deviation, understand on the daily, what I like about this is how consistent it's been for a hit to the standard deviation, a return to the 20 moving average. Hit to the standard deviation, return to the 20 moving average. Guys, if I go back here in time and hit to the standard deviation and return to the 20 moving average, here we had a hit near standard deviation, return to, and we'll just call this, let's call that 4. We can call this 5. Let's call this a problematic zone here. It could have been traded. You guys can probably see how to trade that. But let's see up through 5. Let's call this 6. Let's call this 7. We can keep going and going. The point is, once we hit the standard deviation, we have pretty good odds of getting back up to that 20 moving average, the midline of the Bollinger Band. Now, in terms of that doesn't mean it's a guaranteed. The most troublesome part of the trade from a conservative standpoint is that the 20 moving average is dropping. So if for whatever reason we were to get, and let's say the most likely or possible reason would be, well, you just hit overbought on the 4 hourly, right? So the bears are going to be coming in right now, right, and trying to push this thing from overbought to oversold, right? We know they have a 1 in 3 chance. Why is that? Because 3 things can happen, right? We know buyers have bought. They can continue to buy, right? That's the first thing, is that buyers can continue to buy, which is what we want to occur. The second thing that can happen is the sellers can get involved and force the buyers down a bit, and then the buyers can come back. We can get a bit of a bounce on that RSI. And then the third thing that can happen is, okay, fine, bears get what they want. They push it all the way directly down without any type of buyer action whatsoever down into oversold. So really we would need something along those lines, guys, in terms of either the second or third to get us down to this specific zone right here, right? We're gonna need some sort of action, either a quit from the buyers or the sellers just to really, really hammer in, at least to even get back to this preceding level of resistance. And as we look at our downside target, I don't foresee that. I'm in category number 1 right now. I think the buyers have bought. I'd like to see them continue to buy. In fact, this zone right here, let me go ahead and identify that. That's a nice target. It's a little bit hidden. And as much as Bitcoin can get tricky, pay attention, as much as Bitcoin can get tricky on specific triangulations, which is on the lines. Notice we have differentials due to that 2 Friday ago massive hit to the downside. We've got differentials everywhere. If you trade Bitcoin a lot, you know she can get tricky, right? She can get tricky in terms of this area can be very dangerous for Bitcoin generally. Over on a breakout of a symmetrical triangulation, you guys have probably traded hundreds, if not thousands of them on Bitcoin, right? Yeah, so we know. In terms of that, I'll just say, this line right here is our friend. I really like this target to the upside. Why? It's an inverted expression of volatility with the baseline being the specific dual hit with this hidden, just kind of like, it feels like Bitcoin's hidden agenda to get all the way up into this line. If we can accomplish such, may have a bit of, and we've been dealing with this all last week. I don't want to go through every parameter, but a bit of flag formation, upward slanting channel. Again, I just want to see this line hit. Ideally, okay. So if the bears are going to power in, it's going to be most likely because of what? The 4-hourly RSI. They tell them they've got a 1 in 3 chance. That's what I would say right now. But to the extent that you at least follow some of the rationale of what I've done on my orders, which is what? I've held back margin. Okay, I haven't gone in all told $240,000 and given it a stop loss and said let's go, or no stop loss and said let's go. No, I'm playing the odds quite conservatively and rationally, in line with another, even giving it all the way potential to the downside. I can be comfortable with a recoup to that 20 moving average, with the understanding it is that there is a descending nature right now, which bulls need to conquer. Now, personally, I like this up here. You guys know that specific upside target. I'm going to continue to look at this momentum. It hasn't disappointed us yet on the daily. Love to see it continue to grow to the upside. Guys, this is London, former hedge fund owner, private, non-SEC, not financial advice. Make sure if your screen ever turns green, that you are prepared to take. And make sure on trades like this, especially when we're entering into overbought turf on the 4-hourly RSI, that you understand there's a 1 in 3 chance, I don't even want to talk about it, that the bears could absolutely rip to the downside, okay? There's a 1 in 3 chance. You got it right. Can it happen? Yes, it can happen, okay? And that's the bears literally going directly from the overbought, boom, to the oversold at 105,000. So if you're a bear, go for it. I challenge you. Bring it on. I'll hit you harder down here, I promise, than I just hit you up here. That'll be my promise to you. If you decide to push me down this far, I'll triple or quadruple my exposure at this level. That's it, guys. So let's bring it. Let's bring the heat. This is London. And guys, let's get into it. I hope all the VIP are doing well in the back. And it's been a pleasure to watch you guys trade. I'll let you guys go. Let's have a great week incoming. This is London with Market Hedge.